What's up, YouTubes? Coming at you today from the luxury of the secret library room. So I'm just try to explain this and be a little bit on the quiet side. So last time we talked about the chart of Tesla, and some people were asking me, what's the deal with this head and shoulders pattern? What does it mean? Why does it matter? So kind of picked up where we left off here. Got the chart of Tesla up. We're back in time a little bit, around the 5th of August. That's where we found this green zigzag pattern here, and then a blue channel. But we're going to hop on over to Investopedia real quick, just for a garden variety head and shoulders pattern. So over here on the farther in the past side, we had an uptrend that kept on going up and going up and going up, and life was good. So we had a series of higher highs and higher lows, and that's where we start the story here. We're in an uptrend, made a higher high, higher low, higher high. That's where we get to the head, which is the reversal pattern starting, where we come down here and we make a lower or an equal low to before, and then for the other shoulder here, we're showing a lower high. So who cares? What does this mean? It means that we are reversing trend from an overall up trend to theoretical maximum here, and then we will be going to a down trend in the future. So does that mean it's going to go down forever? Not necessarily. So in this perfect scenario we have right here, we have this line which is called the neckline, and that's going to be our predictive indicator. We take the distance between the ultimate top here, the head, and the neckline, and then we extend that downwards, and that's going to be our lower target. So if we're looking to pick up additional shares when it gets down to the target down at a lower level, or if we're looking for the reversal to last longer, this is our sign that a reversal is happening. So it may be temporary or it may be permanent, and that's what we're going to try to find out. So that's where we flip over to our Tesla chart again. This one is inverse, so it's on a downtrend, making lower lows and lower highs, and an ultimate lowest low here. So this is the inverse head and shoulders. So this would be the lowest point in this overall pattern. Then it does make a higher high, a higher low, and another higher high. So this one, as you might notice, is not perfectly horizontal. This one has a slant to the neckline. So who cares? What does that mean? So that just means that it's not a standardized one like we saw here. This one is generally accepted to be a strong reversal indicator. Everything's all lined up horizontally. The target is lined up horizontally. Whereas when there's a little bit of a slant to it, then that's where we come to my particular theory. Somebody else might have came up with it first, but I'm the first one I found to do it, where the target in my mind is not just going to be a horizontal, although we can do that if we wanted to. So if we went and did one of these deals here, this particular one was a 8% decrease from the neckline to the head, so we could literally go up to that same level, and we're just going to bring down a little bit, and you could see what that price target would be off the screen up here. So if you're doing it the standard way, and you just look at the ultimate decline and then the increase, as you can see, it's kind of way off with this data. So that's why I thought I could do a little bit better. So instead of just doing the horizontal version, I'm doing the slant version. Real quick, get back on auto mode. So I can actually drag this over just like last time, show you what I did. As you can see, I'm creating a channel right here that fully engulfs the head and shoulders pattern, and then I'm popping it up and over. So now the target is not just some horizontal line sitting way up there into space. It takes into account the slant. So that's the thing that's a little bit different about how I do it, and I'm just a guy on the internet, but it's fitting the data. So as you can see, it's showing that it is continuing to be on this downward slant. It just happened to come out of the reverse head and shoulders, move upwards towards the target line, and actually almost exactly touch the target line here. So what does that in fact mean? So this is all just trying to get inside people's heads for market sentiment. So when there's the reverse head and shoulders, we went from a bearish down, 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 and not in a straight line, but lower lows, lower highs, into what people are looking to is a new bull market, higher highs, higher lows. But I'm showing here that in this particular case it's only temporary, that it's not going to be something that's going to be a sustained rally for 10, 20, 30%. It's literally just going to be up until it meets this line. This would be a line of resistance. So in order to break out of this line of resistance, you just need extreme bullishness. So that could happen. This is Tesla. People love those electric cars. There's a lot of controversy around it from time to time. So this was a reversal pattern. People's sentiment was improving. It improved up into this next channel, but not necessarily up further. So now we go into this price channel. So what the heck does that mean in terms of buying and selling? In the short term, you see the fluctuations. You see the up to the top of the channel, down near the bottom of the channel, up to the top of the channel. Again, those short-term trends, just a day or a week at a time. But over the longer period, over here, if we zoom out a little bit longer, so we started off right around 12th of August, and now we're looking into September. So month long, slowly degrading for a lot of different reasons. The economy being a big one, so people buy cars, so they have to have money to buy the cars, and they have to have the jobs to have the money. So that's why this channel is in a downward regression. So then we come down to recent periods here, and it looks like there might be another chance for one of these reverse head and shoulders. And I'll tell you why I don't think it's going to work. So as you can see here, this one looks a little bit different. So we have one that's a little more horizontal, but you might notice as I just kind of get this one out of the way here, let's go ahead and get rid of the background so you can see a little bit better. Here we go. So we're looking at the green. This left shoulder doesn't really look very well fitting. We're missing a lot of the top half of this part here. The head right there, that's pretty well enveloped. The right shoulder is looking to be very similar in terms of the overall height, or depth rather, of the middle. So we're showing that this pattern is pretty sloppy, not really going to be a good indicator of future development. It would be a lot better if it looked like the last one. As you can see, these peaks are fully enveloped. They really encapsulate the movement, so it's a much stronger indicator that we're going to go ahead and get the impulse out of the reversal. Now here we could still get a reversal. It could still happen, but this is looking more like a double bottom as opposed to a reverse head and shoulders. What does that ultimately mean in the trading landscape? Not much. Double bottoms can be just as important as a reverse head and shoulders, but in this particular case, I would not be able to identify a specific target. So if we were looking to have a impulse out of this reverse head and shoulders and go up to a certain line in a very predictable fashion, I would not be able to tell you with certainty what that predictable fashion was. This could still be a reversal. We could still be looking at increased buying activity for Tesla, but let's look at a failed version from a more farther away history here. So let us go back in time. We are now in 2021. So this is on a a much more epic time frame. This one here started 26th of October, it went all the way through till 16th of December. So there's a lot more time to percolate. So here we have the left shoulder, up here, the head, and the right shoulder, and that would indicate this is a reversal, and we're going to get an immediate downtrend. Now there was a bit of a downtrend out of the right shoulder, down to this ultimate low point here, but not nearly in the magnitude that we were expecting. And now the reason that I'm hypothesizing is that this left shoulder here and the middle peak were about the same again. So it's not really showing a strong indication. Remember, this is what we're looking for. A shoulder, a pronounced head with an ultimate top, or the reverse of course, and then a lower high over here. So this is exactly what we're looking for, the gold standard. So when we compare it to what we're looking at this side, it doesn't really fit as well. And that's why ultimately this downtrend was short, and then we rocketed back up into a completely different number. So this was not very predictable. I'm not really looking to what happens afterwards here. I'm just looking to see, does it fit the pattern very well? That way I can tell with relative certainty, of course market forces are very complex, with relative certainty, that we can get something predictable here. And here's another version here that was a failed attempt. So again, it wasn't lining up very well. Whereas we have the left shoulder, that one's fine. But here I actually put this point in this spot just so I could show it on the graph. But if I pull it down further to the actual point, you can see it breaks the entire thing. So this was not a good head and shoulders. So that one, again, is not going to be something with predictability. So it's moving around, it's doing exactly what it wants to do, its gyrations, but I'm not going to be able to predict with relative certainty off of that particular indicator where it's going to go. So that's why it's really nice when you get one here that does have more applicability, and that's when you can get these channels and again get some reactions off those channels. This is another example of one that is a good one. So this one here, we're looking at January 22. So that one developed over the course of a couple of months, but as you can see, these graphs are fully enveloped within the head and shoulders, and then I pulled off the channel just as I described before, and as you can see, it comes up to the target area, and it looks like it does have some reaction to the target line. So this is just showing me that there is some accuracy there. Of course, not 100% accuracy, but it's kind of giving us a guideline of what the general direction is from that point forward. After that, we have our converging funnel here. So I'll go more into this into some future videos, but a really interesting thing to look at where there's the highs and lows are becoming closer and closer together, and that's showing reduced volatility. And over here you can see that it rockets up and out of the funnel. It shows a direction and a path, but I am still waiting for the price action to come and re-enter the other side of this pattern. So just a little sneak peek for what we're looking at next time, and that's a little more about the head and shoulders and how you can use it for a little more predictability in tandem with a trading channel, when to use it, when it might not be particularly useful, and how to spot the differences. Alright, well this video is not sponsored by, but a great thanks to the local library, whatever municipality I might be in. Keep the comments rolling, keep on asking questions. I will keep trying to figure out the answers. Happy trading.